Will you take off with Ryanair? Because it's summer, at least in the Northern Hemisphere, I thought we'd look at Ryanair, the discount airline based in Dublin, serves over 200 cities, mostly in Europe. I would probably say all of Europe, but I guess there's perhaps some flights to Morocco or North Africa a little bit. The point is, it's a discount airline, it's based in Ireland, and it's a European Union success story. Why is it a success story? Because they drive costs down to nothing and pass along those savings to the consumers. What does that mean? It means $20 fares from Dublin to Paris. It means connecting secondary cities around Europe, which for a lot of travelers is a boon. It means you can go perhaps from somewhere in Estonia to somewhere in Spain nonstop. A big advantage for travelers in Europe. They're not paying a lot for the ticket and they're going where they want to go. That's win-win. Let's take a look at what the share price has done. Share price has come down a little bit. It's $99 a share. It was up around $125. They had some labor issues this summer, 2018. Some of the pilots, some of the flight attendants were unhappy, called in sick, kind of an industrial action. It brought the stock down about 10-15%. That doesn't mean that the model is broken for Ryanair. Ryanair is a successful company. Now, what is the unattractive side of Ryanair? I'm not telling you anything you don't know, especially if you've taken Ryanair. It's not very nice to its passengers, not very nice to its staff, not very nice to anybody. It's nice to the bottom line, which is a virtue in and of itself. It means they charge for everything. They charge for luggage, they charge for food, they charge where you're going to buy your seat, they're going to charge where you stand in line to get on the planes. Everything is market driven. Gets a little tiresome, especially with airports being congestion, with security lines being long, and it means you've paid not a lot for your ticket, and then you find you got to pay for your luggage, you've got to pay for a glass of a cup of coffee. None of that's a pleasure. The pleasure, however, may be that the stock was down in the 10s, the 20s, the 30s, and now it's at $100 a share. How do they do it? They have one aircraft, the 737 made by Boeing. They've standardized the fleet, which Southwest did in the United States. They go to cheaper airports, but are close to the big urban centers, and they drive costs down. I would almost say it's not an airline company in a traditional sense of a transportation company. It's almost like Facebook. They give away the seats, they give away the pages of their technology in exchange for being able to market subsidiary products to its airline passenger base. Will that be a successful model? It has been a successful model. It's 11 times earnings, 14 times earnings. It's not an expensive stock. Here's the problem with airlines. Oil prices can go up, regulations can kick in Europe. Europe can fragment a little bit more than it has in the last decade or two. All these things could hurt Ryanair. So I think there is inherent risks in investing in the airline industry, if this is what it is. But you've got a world leader in Ryanair. You've got a management that thinks only about the bottom line. And you as a shareholder, you as a passenger, that has to be some comfort. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.